The world of Bitcoin is rarely calm. It's a dynamic and ever-changing landscape that keeps traders and investors on their toes. Its price, a digital heartbeat on global exchanges, fluctuates constantly, reflecting the market's sentiment and external influences. Understanding these price swings is crucial for anyone involved in this revolutionary asset class. It's not just about numbers, it's about the stories and events that drive these changes. Today, we're diving deep into the factors driving Bitcoin's price, exploring both the macroeconomic environment and internal market dynamics. We'll look at how global events and market sentiment shape the value of this digital currency. Bitcoin, the world's leading cryptocurrency, has seen a price dip today. This isn't an isolated incident but part of a larger pattern of volatility. While the exact percentage change may vary depending on when you're reading this, let's say for the sake of this analysis that Bitcoin is down 3%, trading around $26,500. This figure helps us understand the current market sentiment. This drop, while significant, is not unusual for the volatile crypto market. Such fluctuations are part and parcel of the Bitcoin experience. However, understanding the reasons behind such movements is essential. It's not just about the numbers, but the underlying causes. Is it merely a temporary blip or a sign of a larger trend? This is the question every investor must ask. To answer this, we need to consider a confluence of factors, from global economic policies to the behavior of Bitcoin miners. Each element plays a role in shaping the market. Join me as we break down the complexities of today's Bitcoin market. Together, we'll navigate through the data and uncover the stories behind the numbers. Bitcoin, like all financial assets, doesn't exist in a vacuum. Its value and market behavior are deeply intertwined with broader economic trends and global financial dynamics. It's influenced by the global economic climate, especially by the monetary policies of major economies. These policies can either bolster or undermine investor confidence in cryptocurrencies. The upcoming meetings of the U.S. Federal Reserve and the Bank of Japan are casting long shadows on the crypto market. Investors are keenly awaiting any signals that might indicate shifts in economic strategies. The Federal Reserve's decisions on interest rates have a ripple effect on all markets, and Bitcoin is no exception. A change in interest rates can alter the flow of capital across different asset classes. A more hawkish stance, signaling potential interest rate hikes, could strengthen the US dollar. This strengthening often makes the dollar a more attractive investment. This often leads investors to seek refuge in the perceived stability of the dollar, potentially pulling capital away from riskier assets like Bitcoin, causing its price to dip. The inverse is also true. A dovish stance can weaken the dollar and boost Bitcoin. Similarly, the Bank of Japan's policies on inflation and monetary easing are being closely watched. Their approach to economic stimulus can have far-reaching effects. Any surprises from these central banks could introduce volatility into the markets, impacting Bitcoin's price. Investors must stay vigilant to these announcements. These macroeconomic factors are crucial pieces of the puzzle when analyzing Bitcoin's short-term price movements. Understanding these dynamics can provide valuable insights for both seasoned investors and newcomers to the crypto space. One metric that provides insight into market sentiment is the amount of Bitcoin held on exchanges. Recent data suggests an increase in Bitcoin balances on exchanges. This could indicate a few things. Some traders, spooked by the uncertainty surrounding macroeconomic events or seeking to capitalize on short-term price swings, might be moving their Bitcoin to exchanges, ready to sell. This influx of Bitcoin onto exchanges can create selling pressure, potentially contributing to the price dip we're seeing. When a significant amount of Bitcoin is readily available for sale, it can outweigh buying demand, leading to downward price pressure. However, it's essential to remember that this is just one indicator among many. An increase in Bitcoin on exchanges can also be interpreted as a sign of growing market participation. New investors might be moving their Bitcoin to exchanges to actively trade or participate in the DeFi ecosystem, which could eventually lead to higher demand and price appreciation. Additionally, the movement of Bitcoin to exchanges can sometimes be a precursor to significant market events, such as institutional buying or large-scale trading activities. Understanding these dynamics can help investors make more informed decisions, whether they are looking to buy, sell, or hold their Bitcoin. Bitcoin miners, the backbone of the Bitcoin network, are facing their own set of challenges. The cost of mining Bitcoin, primarily due to energy consumption, has been on the rise. Simultaneously, the recent price dip has squeezed miners' profit margins, forcing some to sell their mined Bitcoin to cover operational costs. This selling pressure from miners, if sustained, can further contribute to downward price pressure on Bitcoin. However, it's important to note that many miners are long-term Bitcoin believers and might choose to hold on to their Bitcoin even during market downturns, anticipating future price appreciation. This balancing act between miners selling to cover costs and holding for long-term gains is another crucial factor influencing Bitcoin's price trajectory. Understanding the behavior of these key players in the Bitcoin ecosystem is vital for any informed investor.